Hello everybody and welcome back to another installment from our series Straight from the Horse's Mouth. Europe's goal is to be the world's first climate neutral continent before 2050. The European Green Deal will help transform this ambition into a reality, but it will also affect many outside of Europe. To prepare exporters from down under, this webinar focuses on the key sustainability related standards from the EU's Green Deal and how they affect access into the EU market. Here's a sneak preview.
It is very true. Supply chains do touch all of us, whether or not we export to the EU, we import from them, because someone in our supply chain does import or export, has import or export relationships with the EU. And that is why it is really relevant to all of us in Australia and in New Zealand.
But really for us, the next frontier is to become, as part of the European Green Deal, the first climate neutral continent by 2050. This will provide investment opportunities for companies worldwide wanting to invest in sustainability. We're proposing to include maritime emissions, not only domestic ones, but international shipping emissions for half of the legs of the trips coming into the EU or departing from the EU. And we will revise the whole manufactured product legislation also this year to ensure that all this thinking of having a maximum carbon footprint, a recycled content, repairability, upgradability, systems are in place so that we change the way products are designed worldwide. We have tabled draft legislation earlier this year requiring that every battery put on the EU market has a carbon footprint declaration and plan in a couple of years to have a maximum carbon footprint. That will change the way batteries are produced worldwide because the EU is such a big market. The EU, through this Green Deal, is committed to lead by example, but it also committed to ensure that we push others to act as well and that we're changing supply chains worldwide through diplomacy, through trade, but mostly through standard setting.
This webinar covers an array of topics such as the role of Green Deal policies in achieving the EU's climate ambitions and upcoming sustainability standards that will affect exports. With that, let's get started.
Good afternoon, everyone. Welcome to today's webinar, another one in our series, Straight from the Horse's Mouth, Insights from Experts in 30 Minutes. Today, we've got a guest speaker, Caroline Lambert. Today's topic is the European Green Deal, implications for exporters. Now, is it really just for exporters? That is a really good question, and that is a question that our clients are asking us very often. So the European Green Deal, well, we're not exporting. Is it relevant to us? And that is why we thought we'll put today's webinar on, because we're all part of global supply chains. And if we think about global supply chains, you just won't believe how vastly, hugely, mind-bogglingly big they are. And that is by Douglas Adams. It is very true. Supply chains do touch all of us, whether or not we export to the EU, we import from them, because someone in our supply chain does import or export, has import or export relationships with the EU. And that is why it is really relevant to all of us in Australia and in New Zealand. And the other thing is that the European Green Deal often is sort of called, oh, that's the European carbon border tax, but it's so much more. It's about carbon, which is really important, but it's also about generally the environment. It's about our food systems. It's about manufacturing, and therefore will touch on topics like circular economy. It touches on topics like packaging for the food that we import and export. But it really does touch all sectors here in Australia and New Zealand. But I'm not the expert. I might be from Europe originally, but Caroline Lambert, our guest speaker of today, she's head of trade for the delegation of the EU to New Zealand. And she has been before that also been on the delegation of the European Union to Australia. So he really understands all the concerns from those two countries down under in relationship to the EU. Very much a warm welcome and thank you for being with us today, Caroline. And I'll hand it over to you. Thank you.
Thank you very much, Barbara. Thank you for inviting me. It's a pleasure, and good afternoon to everyone. So I'll present the Green Deal. But first, I'll say a few words about who the European Union is. So with the largest, the longest, and the deepest experience of peaceful economic and political integration. We have 27 member states who have decided to share sovereignty on a number of issues. We have 450 million people who benefit from the freedom of movement of goods, of services, of capital, and of people, of workers throughout our borders. But really for us, the next frontier is to become, as part of the European Green Deal, the first climate neutral continent by 2050. The political stakes are very high because this is our leadership's priority, because it is a test for the European Union project, a project of peace, of solidarity, and of prosperity inside and outside our borders. And it's also a test of our influence beyond borders. And I will focus on our influence beyond borders today. So what is our climate actions footprint beyond our borders? At the moment, we only represent 8% of the world's emissions, but if we take into account our consumption-based emissions, it's 10%. And we want to start tackling these consumption-based emissions, and that will have an impact on global supply chains. We are the first climate finance donor internationally and development finance donor. It means that we aim to reduce emissions beyond our borders through this finance, and we're changing markets in developing countries as well. We are the largest research and development innovation. We run the largest program for our RDI. It's called Horizon Europe, and it's open to scientists worldwide, including in New Zealand. It's also focused on climate solutions. And so we are the cradle partner to develop these solutions. We're the first investor outside borders worldwide. We're the first exporter, the first importer. We have the largest number of FTAs with the largest number of countries. We have one of the largest footprints for banking worldwide, and similarly, one of the largest footprint for our corporates. It means that the rules that we set regarding sustainability in our FTAs, regarding sustainability in the way our banks are functioning and the way our corporates, our businesses are functioning, make us rule makers internationally on sustainability. We also have 20 years experience with policymaking, and we have this, what I call the trophy graph, that shows that it is possible to reduce emissions as you grow your economy. So that gives comfort to others internationally to follow suit and be ambitious like the European Union. That's our hope anyway. So what is the tagline, the slogan behind all of that? It's the European Green Deal. To be the first climate neutral continent by 2050. We have organized this vision around a mission statement, the mission similar to putting the man on the moon. This is what we call the EU's man on the moon moment. The lady here, she's our president. She's called Ursula von der Leyen, and she's the one that's really spearheading this vision. And we've already set in stone quite a lot. We have a constitutional climate law like New Zealand that requires us to go to net zero by 2050. Actually, it requires us to go net negative after 2050. It also asks that our member states develop together with local governments, their regions, their federal states, depending on how different levels are organized, they agree a nationwide emissions roadmap for 10 years inserted in a 30 years vision. So we aim to bind the political leadership through different electoral cycles with this law. And we have already revised our legislation for the financial sector so that we start reorienting private capital towards sustainable development aims, be it in Europe or outside the European Union. This will provide investment opportunities for companies worldwide wanting to invest in sustainability. Our next goal towards net zero is to reduce our emissions by 55% by 2030 on 1990 level. It's a very ambitious goal because it's a domestic goal. So we're not planning on buying emissions reductions abroad. It's all on our territory. And there's limits as to how much can be compensated through planting trees, for example. So it really puts the burden on the shoulders of emitters today to reduce emissions. We're galvanizing ambitious finance as part of our recovery. That's around 5 trillion New Zealand dollars. And it's only EU money, so there's also some member states money behind that. But until now, until July, we had not explained how we were going to go to net zero and how that would impact others internationally. And that's what I'm going to present now. Don't be frightened. There will be 13 different measures, but I will not explain all of them in detail. I will just first start by explaining the logic of them, and then I'll focus on the ones that have extraterritorial impact. So we've tabled that package, and it's important to note that ahead of the Glasgow COP this year, we are the only jurisdiction to have not only agreed an upgraded emissions reductions target, which we call an NDC, but also the only jurisdiction to have detailed policy measures to meet this target ahead of Glasgow. That means that we are going ahead of other jurisdictions, and that may put us in trouble level playing field wide. And that explains some of the things that we have tabled. So what is the architecture? We have pricing mechanisms. New Zealand also has. It's the polluter pays principle. We have targets. We have targets because there are non-market barriers. So on top of pricing, we need to set targets to help with removing these non-market barriers. We have rules. We set rules so that we give very clear signals to international businesses as to what solutions will be legal, will be accepted on the EU market. For example, our revised CO2 standards for cars and vans say that we want the last internal combustion engines, cars and vans to be put on the EU market in 2035. No more after that. After that, it is a ban. So it's a very clear signal to the automotive industry throughout the world. We also have funds which are fed through revenues of pricing. So what are the extraterritorial elements of that? They are in blue. The first one is the revision of our ETS system. We're proposing to include maritime emissions, not only domestic ones, but international shipping emissions for half of the legs of the trips coming into the EU or departing from the EU. The second extraterritorial impact of the revision of the ETS is that as we will stop free allocation for our industry, we will create a level playing field with importers of these industrial products to avoid carbon leakage, to avoid that our emissions that we want to tackle actually leak outside of Europe together with the jobs and the livelihoods. That's why we're setting up a carbon border adjustment mechanism that I'll talk a bit more about later. Another extraterritorial proposal is the new definition of renewable energy in the EU as concerns biomass. We want to stop importing wood pellets that we then fire that are made of whole standing trees. We want now wood pellets that we import to be made of waste streams from forestry, for example. So this will have an impact on our suppliers of wood pellets worldwide. We're also setting up new rules for the fuel used by planes and by ships that will have international reach. So what is the carbon border adjustment mechanism? We call it CBAM, other people call it EU carbon tax. We'd rather say it's an adjustment. It is to create a level playing field as we will stop free allocation to our industry. It is focused on only 6 industrial products: cement, iron and steel, aluminum, fertilizers and electricity. And the importers of these products will have to pay an equivalent price to the price paid by the producers of these products inside the EU market. And that will be paid at the border. And the payment will be done according to the price on the EU ETS at the time of entry into the EU. The system will be applied in an even-handed manner to all importers wherever these products come from in the world. And it will start only in 2026. We'll start with, actually in 2023, with just the reporting of incorporated carbon, but no imposition of an adjustment price. What under Maritime Initiative, we will impose a gradual reduction of the emissions intensity of the fuel used by ships calling into EU ports. You can see here what is this rising percentage of, or decreasing, sorry, percentage of emissions from ships calling into EU ports. This comes on top of the EU ETS. And we will also ask that ships do use onshore power or zero emissions technologies in EU ports and do refrain from using biodiesel, for example. For aviation, we will require that planes departing from an EU airport refuel for 90% of the fuel they need for the next leg. And we are getting that compulsory mandate for all jet fuel suppliers at EU airport to have an increasing percentage blend of sustainable aviation fuel. This slide is the slide that shows you all the different elements in the EU system that have extraterritorial reach. I've talked about the top left corner until now, which is what we call the package Fit for 55, meaning fit for 55% emissions reductions. But I will now talk about the circular economy elements, some of which we have already tabled, some of which will come later this year. An interesting one is the sustainable batteries legislation. We have tabled draft legislation earlier this year requiring that every battery put on the EU market has a carbon footprint declaration and plan in a couple of years to have a maximum carbon footprint system before you can sell a battery on the EU market. There will also be a declaration of recycled carbon content into all batteries put onto the EU market, as well in a couple of years' time, a minimum level of recycled carbon content into batteries put on the EU market. That will change the way batteries are produced worldwide, because the EU is such a big market that it will not make sense for companies producing batteries to have two different production chains. And it is the same system that we hope will, just a few more about batteries. We'll also ask that any product having a battery inside it can be replaced. I mean, the battery can be replaced. Product is durable, has good performance, and will have end-of-life requirements as well. It's the same circular economy system that we will put forward for textiles in December. So to ensure that we have minimum recycled content, a carbon footprint, end-of-life system for textiles. And we will revise the whole manufactured product legislation also this year to ensure that all this this thinking of having a maximum carbon footprint, a recycled content, repairability, upgradability systems are in place, so that we change the way products are designed worldwide and to lower not only their carbon footprint, but their material footprint as well. The substantiating green claims legislation is interesting. We did a sweep with the European Consumers Organization in January, a sweep of all websites of companies, of all websites, a lot of websites of companies selling EU products on the EU market, and found out that 42% made misleading green claims. That is, 40% of these companies had exaggerated, false, or deceptive green claims on their websites. We want to end the situation where there is fog as to what's a green claim, what is green and what is not green. At the moment, the only recourse we have is case-by-case application of EU unfair trade practices legislation. And so we want to create an overall legislation that creates a bit of clarity for consumers, but also for governments, for investors, for those that want to do green public procurement. And it will mean that we'll ensure that green claims from now on be benchmarked against a common methodology. We also put forward measures on clean energy. The European Union is the largest importer of oil and gas worldwide. And there are methane leaks across our supply chains. And we want to ensure, and we have satellites for that, that there is detection of the leaks and repair for all the oil and gas that is sold on the EU market. So that will be a new legislation as well. We also want to create a standard for what is green hydrogen and what is green and what is decarbonized gas. There is no overall definition, and it also gives rise to all sorts of greenwashing. So we want to agree that definition. Then coming to sustainable food systems, we will later this year propose legislation on deforestation-free supply chains for a series of commodities: cattle, palm oil, soybean, cocoa, coffee. All of these products imported on the EU market will ensure that there's due diligence so that there is no deforestation in supply chains. European consumers are responsible for around 16% of deforestation worldwide through their consumption. We need to put an end to that. We will also, we've been asked after the adoption of our new common agricultural policy, we've been asked to produce a report on how we could apply health, animal welfare, and environmental standards to food being imported into the EU in a way that is WTO compatible. So that report will be published next year. We now have 3 non-climate related things that you can see here on pesticides, on nutrition, on origin indication. But the last one is very relevant because we want to put forward for 2024 a common sustainable food labeling framework across the European Union. That will not only be about the food's climate footprint, it will also be about the food water footprint, air footprint, the circular economy angle of the food that we will buy in the EU market, as well as the biodiversity footprint. So it will take us a bit of time to agree the metrics, but once we are there and we legislate, all food products sent onto the EU markets will have to benchmark themselves against these metrics. And our intention is to be the first to set up this system so that worldwide people can use the European system as an indication of how sustainable food products are. We also have 2 horizontal legislation that really is about how we change business governance system worldwide. We've done that for disclosure and reporting. We want the financial reports to have a compulsory environmental part that will be published at the same time as financial report, and that will be audited. That will apply to all subsidiaries of EU companies worldwide and all companies active on the EU markets with over 200 employees. So I'll stop here. I've talked a lot. Maybe just a conclusion. The EU, through this Green Deal, is committed to lead by example, but it also committed to ensure that we push others to act as well, and that we're changing supply chains worldwide through diplomacy, through trade, but mostly through standard setting. Thank you very much.
Thank you so much. I think that was a really, really fascinating overview, and especially that we can see how this will all have a positive impact globally. Like if the EU sets standards, for example, for batteries, as you just said, that will have an impact for everywhere. So we'll benefit here from you developing the policies and standards around it that then can be applied and will actually have a positive impact everywhere. So I think that's a really good example. We do have a question for you, and that is, are you able to shed any light on what the common methodology will be for green claims?
Not at this stage, it's too early. That will be tabled in December. If you scroll the internet, you will see what we call preliminary impact assessments with a series of options. But no, I can't talk to the details of something which is not yet tabled, sorry.
That is fair enough. Will the product environmental footprinting methodology play a role in that? Do you know?
It could be indeed. That is one possibility outlined in the draft impact assessment.
Someone just asked the question. That was my question. Someone's asking the question as well in terms of sustainable production in the EU market. What is the role of product environmental footprints for manufacturers?
Yes, we've been developing this product environmental footprints based on life cycle analysis for a while. Their use in legislation has not been really, been developing them without using them in legislation so far. And so now it's going to the next step of actually using them in legislation. And we will see with the proposals on green claims what that looks like.
Damien wants to know if food system sustainability metrics also apply to EU producers and supply chains, or just for food imported to the EU.
It will be for anyone wanting to put a product on the EU market, importers or local.
And another one on pesticides. To your point on the MRLs for pesticides by 2022, are these more stringent to the ones already in place?
Yes, they will review the maximum tolerance limits.
Murray has a forestry related question. Murray, we can count on you for questions. Great presentation, thank you, he says. And will PEFC form the basis of the sustainable forestry standard?
So it's a legislation that I have not mentioned actually, but we've just proposed a new forest strategy, including the development of an EU definition of what is sustainable forest. It's complicated for us because it's not an EU competence, it's still a national competence. Yeah. And so it will take some time before we have European-wide understanding of what is sustainable forestry inside the European Union, but we have common rules. But it's not PEFC, and I don't think we will use something that already exists. We would customize.
So PEFC is a program for the endorsement of forest certifications, just to clarify that.
Okay.
Michael wants to know, how is the investment community responding to the Green Deal? Do you have a feel for that? Or?
Yes, when the investment, our financial advisors, investments, our pension funds, our insurance, they're very mobilized, and they have been the ones asking for legislation on what can be called a sustainable investment or not. We are very advanced in that. It's something where we're leading internationally. We have created actually that international platform on sustainable finance, which we chair, where we share our legislation solutions with countries worldwide. We're currently developing a common ground taxonomy of what is a sustainable activity with China, for example, and New Zealand is part of that international discussion that tries to agree common definitions of what is a sustainable investment. Common vision of what the green bond should look like, what sustainable reporting should be from companies. So it's really a field of legislation that is booming, and when we have investors behind us. Because of course, it's the risk for investors of stranded assets is huge. It's a financial stability risk.
Well, talking about financial risks, I guess there is also the task force for climate-related financial disclosure, which is already happening in the EU. It is mandatory for large businesses down here and financial institutions. So I guess those are risks under TCFD and would come up in that reporting as well. So there are very close links between those initiatives, I think.
Yes.
Megan wants to know, will wine, beer and liquor be grouped in with the new requirements for food products?
2024, I don't know yet the exact scope of the legislation. I believe we would also have beverages, but it's my opinion at this stage.
How does the EU see the role of various sustainability standard systems, e.g. metals, agriculture, food systems, in addition to or complementary to EU's legislative standard setting role?
We feel there are too much. So the latest I've found is that there are 457 different voluntary environmental labels worldwide, and hundreds, only in the EU market, more than hundreds different ones. And that creates that lack of visibility for decision makers and for consumers. And that's why we want to simplify and have one pan-European one, which should be compulsory. So our decision is to harmonize and go for one compulsory one that we would be decided by legislators.
Matthew wants to know, is it likely that the carbon border adjustment mechanism adjustments be a universal amount per product, or would it be based on individual exporters' carbon emissions?
It is based on the individual exporters' carbon emissions, so it will be really customized to the particular product coming into the EU market. If that product comes from a very clean factory abroad, then that product will not have to buy a large amount of CBAM certificates, as they are called. If that product comes from a jurisdiction where the carbon price was applied, then that will be deducted to whatever CBAM cost is. So it's really customized to the actual product and the actual jurisdiction from which that product will come, and the carbon price in that jurisdiction. We don't want to double impose anything. We just want to create a level playing field.
I think the level playing field really is a very nice final sentence to summarize it all. So I'd like to thank you very much again for sharing your insight. There was a lot of information in that webinar, really useful for everyone dealing somewhere in their vast, hugely mind-boggling big supply chain with the EU. We have created, and we will publish a recording just in case there was so much detail and you want to refer back to something. The recording will be up on our website. If you have future questions coming through or need support with any of those areas, do get in touch. And I just want to let you know there are more webinars coming. Our next one is with Futurity on New Zealand's first commercial biorefinery. We've got also an online SDG workshop coming up. And with that, thanks again so much, Carolina. And I wish everyone a wonderful afternoon.
Thank you very much, Barbara, and a wonderful afternoon to everyone indeed. Bye-bye.
Bye-bye. Thank you.